Welcome to The Explainer. All right, today we're diving deep into Pi Network. You probably heard of it. It's one of those crypto projects that people either absolutely love or they're just deeply, deeply skeptical of. So what's the real story? Let's get into it.
Well, just to kick things off, look at this number, 96%. In the last month, the Pi token's price has shot up by nearly double. That is a huge move for any asset, period.
And this wasn't some slow and steady climb. No way! This entire price surge happened in just over 3 weeks, since it hit a low on October 11th. You see an explosion like that in such a short time, you've got to ask, what's going on here?
And that's really the core question, isn't it? Is this the market finally waking up to some real potential, or is something sketchy happening behind the scenes? We're going to break down all the evidence and see what's really driving this thing.
Okay, first, let's look at the positive side, the bullish case. What are the arguments that this growth is legit and that it could actually last? So a huge piece of the puzzle for the bulls is this thing right here, a classic chart pattern called a falling wedge. Now for traders, this is a textbook bullish signal. It basically suggests that the sellers are running out of steam and the buyers are starting to take over. And when the price broke out above that key 25-cent level, it was like a confirmation, a big green flag for a lot of analysts.
And based on that pattern, these analysts are now throwing out some potential price targets. The first, more conservative one is around 32 cents. But if things get really heated, some are even looking at a potential move all the way up to the 50-cent mark.
But hey, this isn't all just about lines on a chart. There's real, tangible growth happening too. In October alone, the network verified more than 3.3 million new users. That is a massive number of real people officially joining the ecosystem.
And on top of the user growth, the tech itself is moving forward. A major upgrade called Protocol 23 is on the way. And this is a big deal. It's set to bring in smart contracts, which basically opens the door for the whole world of DeFi, or decentralized finance, on the network.
So that all sounds pretty good, right? But that's only one side of the coin. Now we have to look at the other side, the bearish argument, which honestly paints a much more concerning picture.
Yeah, this project has had a very rocky history. It's been hit with major controversies, from the CEO of a big crypto exchange, Bybit, publicly calling it a scam, to a huge 12 million token dump from a single wallet that just cratered the price by over 50% back in May.
And this is the kicker. Look at this distribution. A staggering 96.37% of all Pi tokens are held by just the top 100 wallets. That is an absolutely insane level of centralization. It means a tiny handful of wallets could, in theory, manipulate the price or even crash the market whenever they want. That is a giant red flag.
So here you have it, the central conflict side by side. On one hand, you've got legit technicals, real user growth, and tech upgrades. On the other, you've got this ugly history, crazy centralization, and a price surge that, frankly, doesn't have a clear catalyst. It's a total paradox.
Now, whenever you have such strong arguments on both sides, you know there's going to be a lot of misinformation out there. So let's take a second to cut through the noise and separate the actual facts from some of the myths that are floating around.
You might have seen this one making the rounds. A huge claim that Pi is about to become ISO 2022 compliant. Now, this is a new global standard for banks, and getting it would be a massive stamp of legitimacy, putting Pi in the same league as projects like XRP.
But, according to the fact check from our source material, yeah, it's just not true. Pi is not on the official list, and the core team has said nothing about it. This one seems to be nothing more than misleading clickbait.
Okay, here's another big number you hear a lot, that Pi has a massive user base of over 60 million people. If that were true, it would be one of the largest crypto projects in the world.
The reality, though, is that this number is pretty misleading. A lot of people have downloaded the app to mine Pi on their phones, for sure. But the number of people who have actually completed all the verification steps and are using the real live blockchain, that number is much, much smaller.
Now let's move beyond the myths to a very real and very big risk. This number right here, that's how many Pi tokens are scheduled to be unlocked and released onto the market every single month for the rest of this year.
I mean, that is a ton of potential selling pressure, and it leads to the critical question our source material poses: is there enough demand out there to actually absorb all those new tokens without the price just completely collapsing? It's a serious concern.
So, we've looked at the bull case, the bear case, we've debunked some myths. After all of that,
What's the bottom line? What should you actually take away from all this?
Okay, here's the balanced view. What's true is that the technicals look good, real users are joining, and the tech is improving. But the risks are also undeniably real. That extreme centralization, the huge token unlocks coming, and a lack of transparency. And what's not true are the most sensational claims, like guaranteed compliance or that 60 million user number. So it's not a simple scam, but it is far, far from a safe bet.
And that leaves us with this final thought. Pi Network is stuck in this weird tug-of-war between real progress and massive risk. The tech is moving forward, but the dangers are clear as day. So the question for anyone looking at this is, what would it take to change the equation? A listing on a huge exchange like Binance? A fully transparent audit? True decentralization? What's the one milestone that would be enough to convince you that the potential reward finally outweighs the risk?